right? A lot of you guys, and I'm speaking from experience based on your profit gaps and also from my personal experience. And this might hit you in many ways, and it might hit you in every single way. If you read the book, Mark Douglas, Trading in the Zone, who remembers what the profit gap is in trading? From the book.
Yeah, go ahead.
I do not.
Okay. Did anyone read the Douglas, Trading in the Zone? I told you guys you definitely should read it if you're struggling.
Isn't it between the setup and your profitability?
Yeah, I'm reading it, Shorty, but maybe I had not reached that point. I'm
Okay.
still reading.
Okay. So the profit gap, the way he explains it in the book, and somebody go on mute, please. Go on mute. Let me check now. All right. So the Okay. So the profit gap that he talks about, nobody remembers what that is, Drew? Nobody?
It's been so long since I read that book. I don't remember. Sorry.
Yeah, you should spend some time tonight.
Okay.
No, you need to read it. This everybody needs to be in your head because everybody's part of it. I'm part of it too. It's basically the gap of what you could have made if you followed your plan versus your bottom line results. And I want you to think about this for a moment. How many times you guys had a perfect plan and then something came and instead of shorting here, you went long here? Or, you started shorting here and the market bounced. But your plan said, to go long here. But instead, you did the opposite. So basically, it's what you would have made following your plan and sticking to what you identified versus, actually what the results were. And I know a lot of you go back and you look at the market and you're like, man, if I just did what I planned on doing, I would have been okay. How many experienced that?
Yes, sir. I have.
Me for sure.
Definitely.
Every day.
And do you guys know how you guys try to fix this, especially new guys? I'll tell you now, if you're new guys and you're like, man, this shit's not working for me, well, you're in the middle of the profit gap. The next stage, how a trader tries to fix it is this way. They find, let me make it simple for you. I'll give you a visual. Where's the one that has million exponential moving averages? You guys do this, then you guys change a bunch of these lines, then you have 1,000 lines, then you add one more indicator. You add the Chimoku clouds, then you add Bollinger Bands.
RSI.
You add that, and then you go and you're like, man, RSI is the best thing alive. Then you add the MACD. And now your chart looks like this. And then you're like, oh, man, Mark or whoever, let's say David, man, he's really good at this. He knows how to trade it every time. Guys, somebody go on mute. Come on. And then you start filling that gap of the profit of the trading with new strategies, new methods, spending more time in front of your computer, charting, doing this and that, doing opposite of what you're trying to achieve with trading. What you should be doing with trading is you get in, you see, based on the look of the market, if there's a setup that you do repeatedly over and over, and that you have a probability that's higher on winning than losing. And the less you think about winning and losing, and that you have to be right, the more profitable you're going to be and the better trader you will be. When you see a stop loss, think about it in terms of more than 50% of people were right and the other half was wrong, and I was part of the other side that was wrong. Let me set up my stop loss. Your stop loss should be the pain amount of money that I will not see somebody in the message say, man, I lost this much today. Today, there's a lot of people in Discord. Well, not a lot. There's 2 people in Discord that I can. Well, today only one. I'm sorry, Sith. That's very emotional, and I know people when they started in this group, they were the same way. They lose money, and I'm not picking on you, Sid, but this can be a good lesson. You show emotion. Oh, I lost money. Well, you shouldn't have played if you're not willing to lose it. Drew, do you know the outcome of every trade you take?
The outcome? I mean, I know one of 2 possibilities for every trade.
Okay. But if we knew every outcome of the trade that we set up, I don't expect to win every trade, guys.
Yeah, no, absolutely not. I know I can win or lose every trade.
But so the difference between maybe me and some of you guys that are losing, when the trade doesn't go in my way, and this is the question I fucking hate, and I get passionate. Shorty, are you out? Okay, well, why does it matter to you if I'm out? It's my fucking money. Why do you care about my money? I don't ask you guys, did you get out? I just tell you that if it was a good trade or not. You should not care about, if my account's $1.6 million and I lost $300 in it, is that the same as a person that has a $5,000 account?
Hell no.
Our risk definitions are different, and every trade is different. It doesn't matter who's in, who's out. If you're asking who's in, who's out, you're not ready to trade. You don't know your setups. Therefore, that means you have to learn, but don't go wasting money and creating that gap, the profit gap, and filling it with a bunch of shit that's going to make it harder for you to become profitable. Like, it's almost going to be impossible to fix it if you just continue the same thing over and over, because you're going to engrave that, right? So your problem, if you're in this stage where you're filling the gap fill, and on some guys I see you adding different shit to your charts. Did I show you today at 2:30 when I came back from a doctor in 10 minutes? What did we do on ES today? Did I give you this right here? That when I came back, I have a screenshot. I told you we're going to come back, break it, we're going to come here, and we're going to reject. And I said we're going to go to the bottom. Does anyone recall this?
Yep.
Yeah.
Yep.
Did I give you the same exact arrows like this? And I said it was going to go to the bottom here. Go check. Go find it. I think I can find it. I suck at finding stuff.
I remember you said, "Here's the good one. Here's a good short it here."
Yeah, remember
But you had a plan.
Just free.
I just need to find the picture. I just want to show you the picture to what this. Somebody can find it. Just find it. I don't know how to find this crap. And it's not the ego. I just want to show you something, and then hopefully it clicks for the people that are struggling a little bit. I don't know where that is. Anyone find it?
You type too much shit.
I do.
I'm on page 12. Oh, I found it.
Page 12.
Are you reading your book?
Central.
Can you link it back or something? Bring it to the front.
I'm trying, man.
I apologize, man. So I know how it is when you get into retirement.
Yeah, I'm slow. Oh, he cheated.
Okay, this guy found a better picture. Thanks for trying, Dumpster. Okay. I just want to point this out. Okay. I come on, right? Well, I came online. Well, that one was better, actually. There. No. There. Yep, okay.
Dumpsters has the timestamp.
Yep. So, yeah, I don't know what time it was. Was it like, I mentioned at 1:47. So at 1:47, it was right here. Yeah, 2:47, yep. At this time, I said, hey, this is the best setup. We're going to push here to the red line, and then we're going to look for a rejection there, right? And that was the whole deal that we were waiting for. I said, hey, this was nice consolidation. As you guys know, lower highs, higher low means triangle. In this case, it's symmetrical. We're going to break it. They're going to set up a trap. And that's what I was live and I said, this is going to be a good trap. A lot of retail is going to fall for, and then they're going to dump it in their face. Where does the arrow point to?
Value area low.
And what did we hit?
Value area low.
Okay. This is not me saying, hey, I am right. But this is me believing in the system that we have. And my entry was going to be here no matter what. And I even entered, if you guys recall, at 36.80. I got in earlier and I paid. I didn't go full position. I just got started and I said, I knew already that if it breaks, that I was going to go in and add here. I knew that. I gave it a chance. I wasn't down much, and then I added, and we held the full position. We took some here, and then the dump happened afterwards when the contract went, I think, 130 to 19 on this dump here. I think it was it 36.75 or something like that. They dumped, but the concept is this trade could have, here it could have gone against me, right? And all I had to do is respect my system. Respect the system at right here. If this was my identified stop, based on this line, as soon as you break this line here, I should get out. But that's having a system and probability. I'm not betting that we're going to be every trade green. But if you flip a coin 100 times, it's going to be most likely 50-50. But think about that now in terms of your process. If your system has an edge, even if it's 1% edge over, let's call it dealer here in a casino, over a period of time, they will accumulate more money. So think about, how does casino make money? There comes a bunch of idiots that are drunk for their bachelor party, and then they throw money, right? And they throw more money because they think they can beat the dealer with no strategy, right? Most blackjack players, are they allowed to be in casinos in Vegas? The professional players?
Nope.
No, they're not allowed to be there, guys. And why they're not allowed to be there?
Because they have an edge.
Because they have an edge, and the casinos don't like people when they have an edge. So instead of giving your edge to the market by not respecting your stop losses, respect it. Let them hate you for taking their money. Instead, what you guys do, you guys are the drunk guy that comes to casino and just plays blackjack and gets his ass handed to him. And you know what to do. It's just that you don't respect. It's not about being right once or twice. It's in a span of 5 years that your winning trades are higher than your losing trades. And it's the same as casino. How many people go and drop $50 million in casino in a single night? Is there a lot of those guys?
Not too many.
No.
Not many, guys. So the casino plays the game of compounding too. They say, I know that there's going to be, they know the traffic that comes through Vegas, and they're like, yeah, we know, the hotel's occupancy rates are 90%, and we know when's the busy times, and they can figure out, right? I mean, COVID low, no traffic, no money. So they know the traffic, they know the average pocket of a guy that's coming in, how much he's willing to lose. And then they lose more than that because they know what happens when you lose a lot of money or win a lot of money. Well, when you win a lot of money, what does casino do?
They bait you into trying to play more.
They give you comps.
They give you comps.
You come back.
Oh. Well, but let me ask you guys, when you lose money here, what comps does stock market give you?
Shit.
None.
Guys, they don't give you shit, and you keep coming back with the same attitude. You lose, and you're like, oh, okay, well, at least go to fucking casino, man, over there. Like, just put it all on black, win 20 grand instead of losing it here. I promise you get upgraded rooms, you get a bunch of shit, and I'm telling you guys from my friend's experience. You will get the best rooms, you will get treated like a king. But why does casino do that?
Probably.
There-
Gonna come back.
Could be
Who
coming back.
paid for it?
Dumpster, repeat that.
Probability.
It's about the probability, guys. They know in long term the human is going to fail and make an error over their systems, over their strategy. And then what happens? Then the person becomes addicted and wants to revenge trade to get the money back. And casinos like, okay, well now you're going to work for us for free for the rest of your life because you give up a lot. You know, you mortgage your house, you mortgage everything you have, your family, and then all of a sudden you're employed for life, making minimum wage in the casino. And I don't know why some of you guys do that. When I tell you today, I think we're in a trade. Let me just think. I think it was 2.5. No, it was 3.2 to 3.8, and I saw people taking profits, and I was happy. We were in a trade for 12 seconds, guys, and he made $60, and he was happy and left. Who's not happy with $60 in 12 seconds? Anyone on the call?
I am.
If you guys are not happy with that, I will give you my address, and I'll let you work in the backyard for me for $8 an hour. And let's see how quickly you will appreciate that $60 in 12 seconds.
Yep.
Just do the math, guys. 5 times 12 is how much?
$60.
Yep.
Yeah. And that's a minute. You know, like in 12 seconds, you're making $60 and you're not happy with it. Well, you're not going to grow much as a trader if you don't appreciate the small dollars being added up. And I showed you guys even the Excel spreadsheet that once you kind of repeat it over and over, even if it's compounded daily, in 400 days, you'll be, if you were to do that daily, 3%, you become a trillionaire in 3 years. But then it's about the discipline, right? It's so much more about the mental side and respecting your stop losses and not having that bias that you have to be right. There's no right or wrong. You're just testing to see if you can beat the dealer in this game. If majority of the players are on the dealer side, that means you're on the wrong side and you get out. You accept it and move on. How many would say that you suffer from, man, I want more profits? How many of you guys always seeking more? It's okay if you do.
I have, for sure.
Nope.
Better at it.
I do.
I'll take
And
3 to 5% all day, any day.
Me
so
too.
you have to be truthful to that, right? When you say 3%, most people are not truthful with themselves. When you see people making $500,000 in a day on a trade, that's because they in their life they took that 2% every day.
Yeah, that might be 3% for them. I mean, when you see other people making massive money, like, it's like, for me, it's like exciting to get there one day, but it doesn't make me want to FOMO, if that's what you're asking.
Oh, that's exactly what I'm after, because some of you guys don't understand. If you're just learning to trade, you have to go through the growing pains of taking $1,000 and making it 100. I mean, 100,000, not $100.
Can't compare yourself to these guys that have been doing it for a long time. That's what put in my head a long time ago.
You have to compare to yourself, right? You have to compare yourself to yourself from the day before and the day before. Not to anyone else, not to me. Not, there's traders out in the world that I look up to, and they can make 20K in 10 seconds. But that's also because their account's 10 times the size of mine, and they're risking same percentage, but that same percentage means a lot more now for them than it does for me. So just be patient. You'll get there. I don't know why is that, and especially the constant temptation to take a trade. There's times when I told you, even today, man, there's no trade at the moment, and that's okay. If you take every trade you see, your probability of being wrong is high. relax, wait for trades. We waited for this one. There was another one we waited, I believe, here on the retest of PD value area high. I think few people took this one. You got in. There was 80% rule triggered here, and that's just a setup, guys. Just think about it. 80% rule is our strategy, but does the strategy tell you where we're going to go with certainty?
No.
Not a chance.
It's just a probability, guys. There's an 80% probability we're going to go to the previous day value area low. And in this case, we did. So 80% is true, right? But the technicals, a bull flag, a bear flag, any of these patterns, they will not tell you what happens next. Not a single strategy. If somebody tells you they know what's going to happen next with certainty, you should probably run away from it. Because the market, every single trade, every single candle is unique to time, place, and volume. So it doesn't matter what you think. Markets, you know, it's a random market, and that you cannot predict where it's going to go. But if your setup says that there's an 80% chance, and you believe in that setup, then there's fucking 80% chance you're going to go from here, and you play it, and you put your stop loss right here above the shelf, and you move on. 7 points risk. So this is the trade today. But if you're not willing to put time into your studies, I think it explains it pretty well in a PowerPoint. This trade here was 5-1. Is there a reason why you guys will not take? If I tell you, you give me $1, I give you 5 back, you guys would not take this?
Sure.
Start thinking instead on probabilities and not winning and losing. Once you drop that winning, losing, your life is going to become easier. You will stop the temptation of consistently looking for a trade. And more so, you're going to know where you should be in and where should you be out. We have few setups, guys, on volume profile. And I identify them all in volume profile for you. I mean, you don't have to look much. Your analysis, so how do I put it? If you're doing more analysis to be right, you're doing it totally opposite in terms of trading. You're trying to prove that you're right, but you're not executing on your plan. So what are you proving right? Like, I just don't get it. Like, what are you proving right? There's a few setups, guys, and I mean, I added stuff here, but there's few setups that we care about. So let's see. We have the accumulation setup, the break of high-low, and then this here combined when you break support and resistance, and then the value area tips. So the value area tips, where are they? Okay, here. All what you need to know is the 3 setups and some of these rules right here. And these 3 should guide you through the strategy to know if you should expect a rejection or if you should expect a support and a bounce buying level, right? Instead, some of you guys are coming up with your own stuff, adding more stuff to fill that profit gap, confusing yourself what you should do. It should be fairly simple. Apply this in the morning, know the type of day we had. Did we open above the value area or below it? If we open above it and we come below it, that's bearish. Is that correct?
Yeah.
And what did we do today? Does anyone know? Did anyone look? No, let's remove everything. Let's just go 15 minutes here. Okay. So previous value area was, let me make sure that this is not some, okay, here.
Can you drop that V3 version on the drive?
Yeah. I need to add more stuff to it, but I'll drop it.
Thank you.
Okay. So let's look at this, and I'll just go on 3 minutes because that's typically what I trade. Okay, make this one easier so you guys can see it. Okay, so this is our day right here. So let's see. Make this easier so you guys can see it here. So this was our day right here. Previous day, I was almost off. Okay, so we opened inside the range, right? You guys see it? These candles, we, the night session opened there. Then when we come back to the 9:30 session, we pushed above it, right? You push above the value area, treat it the same way. Open, push, and you bring it back inside. It's no bueno. It's not good. Let me not do that. Now we pushed above it, right? So many ways to find why we rejected here. I'm not focused on that. You could use fibs, you could use whatever you want. Figure it out, and you'll see why we were rejecting there. I'm not focused on that value area. So here, you will note this. Hey, well, last time we came back to this value area, we quickly went above it, and then we dumped. Well, here now, obviously, we got over that supply, and a lot of people were fairly bullish, right? I think, the retail got a little bit more excited, and then we brought it back inside, right? So here they started bringing it back inside, and look at this. This was your sign here that, there's a high chance you're gonna go down. Here they grabbed the liquidity from the buyers. They grabbed their liquidity here, they sold it, and then from this level they just send it down. So this is our 80%.
That would be 80%, right?
Yeah, this is your 80%.
Gotcha.
So you have a couple of candles here. I'm on 3 minutes, but if you go on 5 minutes, here, look at these 5-minute candles. I mean, these are not bullish candles. These are not bearish candles. They're just indecision candles. And, equally on both sides, arrows, bodies. But this happens to be occurring kind of on the bounce here on the rip. And now they got inside the value area high. Well, I mean, if you're not confident, then just use the patterns, right? You can short below here. It would be, a better confluence, a little bit risky, safer. And if this volume profile, if we knew this volume profile from before here, you knew that there was a gap literally starting right here at 3702 in terms of volume, right? So you knew this was going to be at least a high probable hit here and then waiting up here on the top. And you had the prior day POC, so we talked about this as well, right? If you guys recall, if this was our POC here, prior day POC, what did we talk about probabilities last time when we covered this? Anyone? Did we say if this is your POC and your value area high is here, you don't have to get in on the rejection of the value area high. Let's say if it was here on this one, you can wait for the break of this previous day POC and get in there, or wait for the retest. So now, what do you think is happening here if it comes to 3707?
Rejection.
No, it's potentially a rejection, right? I mean, and I simply know the volume accumulation setup is going to tell me what's going on. So here, this is turning a little bit what now? Anyone?
Bearish.
Why is it turning bearish?
Because you're below that POC.
I'm above it, not below it.
I'm saying Buddhist is coming down for a retest of the POC to go back up to the value area high, retest on the previous value area, or that line that's up 3707.
Yep, that's correct. So right now, since this was on the recent sell-off feed, I'm grabbing the sell-off, the trend down, which means higher high, lower low, higher, lower high, lower low. I'm grabbing this to see where the majority of the sellers were. So it looks like if this was the majority of the sellers and highest volume of sellers was at this level, and now we are over their level of short, Well, it means that we took out these sellers. On the order pane, you would see that these sellers' numbers were lower than what the people were bidding. So they mean they took them out. So maybe this seller here that was existing here before now is gone. Okay? So that's what this means. But this is just intraday stuff. I'm only grabbing from 1020 to, what is this? 130. Do you guys think this is enough data for me to plan an entry tomorrow? Probably not, guys. This was good for today, for the rejection. It was perfect. We wanted this. We played it. Look at this. We came here, poof, that was short and gone. So now, you know, the analysis that we do, and I explained this also last time that we talked about, first see if we're in a range if we're consolidating, right? So if you guys look here, here's my 65-minute candles. Okay, so I'm just going to make this black. So there's one here, and then there's one here. So this structure is really not well respected overall. So what I'll do is I'll probably put it here because of this one, and then I'll just color it. And am I right? Am I wrong? Who cares? This is where the recent sellers are, so I'm respecting their level right now. So the next thing we do, what would we call this on the top now?
Resistance.
Is it this? No?
Structure high.
Guys, SSL is just a made-up name for us, which tells us this is structure low, structure high. That's all. You can call it whatever you want. This is just what Dumpster came up with for us, so we're using this. Thanks, Dumpster. It's very logical. So we have the SSL high and SSL low. So then what I have to do is I grab this guy to here, and Dumpster gave us another trick. If you click the extend right here, it will continue grabbing for the latest candle. So you don't have to constantly update it. So now there's a couple of plays you got. All right. We're going to write them down together. And guys, I'm going to call out every single one of you right now on here. Agacho, you're first. Give me a setup. How do you play this? If you don't want to be called out, you should hop off and probably go cancel the membership. Because if I'm going to waste my time, you should be able to answer this.
Their server muted.
Yeah.
Unmute him. Yep.
Okay.
Gotcha. Can you answer? Where is he? I'll wait. Who wants to answer? Somebody wants to answer. If you're struggling, this is your chance.
All right. You take the rejection off value area high.
Yeah.
Okay.
Or you can go
So,
long from POC right there.
long right here.
Yeah, to the value area high.
Okay.
Never mind. I saw it differently.
Okay, good. Thank you. What's
I'll
wrong
go
with this trade? What's wrong with this trade here?
Not enough profit.
Not enough profit, guys. I'm not. I don't even see this in my mind. I don't even see this as a trade. No bueno. Next one.
Is it like consolidating, Shorty?
So you have to give me the levels. I'm not going to take any of that. I want everybody to be specific as it gets. Give me the levels. Everybody knows the names of everything on the chart here. Give me how you want to play it.
Could short the rejection of the POC.
Yes. So we got one. Let's see. One short the rejection of the POC. Okay. Sub question on this one. better to short on first tap or let it pop above and short on retest going down? Which one? What's the answer?
On a retest.
Maybe
The
let it
second one.
off to value area high and then short it on the retest.
That's a much easier trade than it is, going initially on the first one. Because we don't know, for instance, right now, we don't know how strong this demand is that's been built. We don't know it. We can't match the orders to know if they're buying or selling. The only one thing we know is what? Based on the structure, low and high, what I've been telling you guys. There's something telling you something's different.
It's a D-shaped volume profile.
Yeah, of course. Everything that's in balance, that's accumulating, is going to be D-shaped.
Yeah, I'm just pointing it out.
Yep.
There's a higher low.
There's a higher low. So there's a higher low. What did I tell you about the higher low being made in the structure here?
Going to top.
There's a higher chance it's going to go to the top, higher probability. Let me ask you now, here, if we put it here, it's still higher low, guys. So I'm not tricking myself. I can put the SSL low right here because all of the bodies closed above it. So, but it's still making higher lows. So it could be that these, buyers were a little bit more aggressive here, and they were not even allowing structure low to be tapped. So now you watch, and then you have another play that's building right now in the play. Okay, what's the second play? Not the same person. I don't want everybody answering the same. I know who knows it. I want the people that are struggling to try.
Could you try a bounce off that high value node that's at about 30, it's like 3688?
I'm trying to see who is speaking. So
who's that, man?
Wait for it to retest at the value area low.
Hold on. Jelly, hold on one second. Hold on one second. Who was speaking? I'm sorry.
This way, man, Shorty.
Okay. Yep. Okay, go ahead.
No, I was just saying, could we take a bounce off of the 3688, which is kind of a high value node, on this? If it continues to drop down, could we use that as kind of a support?
You could, but if you're going to use this, is this riskier than waiting it to come back here?
Yeah, the very area low. We will retest and go long.
Yeah. Another play, Jelly, that calls out is we broke this, right? Last time we broke it, we didn't hold it. You're making high lows. If you're going to break this, if you're going to hold this, maybe you're going to come back, do this little shit now for a little bit here, and then you come back here. Well, wouldn't this be a really good trade here? High probability for us?
Yes.
You're holding the angle at which they keep buying, meaning the trend line, right? The slope. And now you're coming back to the value area low where previously you got some nice bounces, right? You got a big old green candle here. You got a failed auction there. You have another kind of bounce right there, and then another retest right there.
So most likely take it long from there as soon as it hits that value area.
Exactly. So this is one of the trades that we talked about.
Yeah.
Once the stock
short
dips below, give me 1 second, value area low, goes to structure, and breaks back inside value area, wait for retest of value area low. High. What is my first exit here? Let me pick somebody. Cuban, you're not allowed to answer. You know this by now.
POC.
Yeah, POC.
That's correct. POC is our first target. And here, the way I play it, so make sure everybody understands this. Do you wait for the price to hit the POC or you sell before the POC?
Sell into the strength. So before the POC.
You do not wait for the IV to slow down. You sell it into the strength, into the momentum. Today I sold some contracts, I think the ones that ran to 12, 13. I sold them at 7.8, and moments after they went to 8.7, they tapped the level, and then they came back to like break even or a loss for me. So did I sell it at the top? No. Do I aim to sell at the top? Hell no. It's about consistently being on the right side of the trade, using probabilities, and the probabilities doing the work for you. If I can hit that trade 3 to 5 to 7, 8, 5 times a day, guys, that's 2K per day.
Damn.
And I'm not exposing a lot of capital, guys. $350, yeah, maybe it's a lot to some, maybe it's not to many, right? Or vice versa. But $350 to make 800, whew.
Yeah, that's nice.
Guys, just think about it. And now you just have to repeat that. Just think about it. You need to, if your goal is 1,000 a week, you need to repeat that process 3 times a week. If the setup is not there, you do not take the trade. You don't come up with the processes. We have defined processes, but you guys are, you have a constant temptation. Man, I gotta be in the trade. What? You do not have to be in the trade. There's no reason to be in the trade. If there's no setup, there's no trade. And until you put this in your head, you will not be successful. There's no winning and losing. It's high probable setups that we're after.
Go look at my log, like 1 or 2 trades a day, sometimes 3 at the most, probably, maybe 4. You just wait for, be patient, wait for those A+ setups and take your profits.
Nope, that's exactly it.
Shorty, when you execute a trade, you always state a price that you're waiting to fill. How do you know what fill you're looking for?
So it's just simple, right? So the price always reverts to the mean, right? Whatever that is, and not only in trading, everything. Gas prices, food, this whole inflation, yeah, there's going to be some painful time ahead, but the price eventually comes back to the mean. And that's just through the natural, whether it's markets or the free economics, whatever that is in life, whatever the scenario is, it'll always come back to the mean. I call it the first standard deviation. Always kind of comes back in there. And that's also our value area and volume profile. That's what's 68. So when I look at a contract like today, I think I wrote that we're looking for an entry at, I think it was 3 to 3.5 on one of the trades. I called out, I'm okay buying between that range because that range was the or below on a contract.
So basically what you're saying is that it eventually comes back to the price where it's affordable for the trader to get into?
That's not exactly, I'm not saying that at all, Cuban. I'm paying attention to my setup. My setup had, I think I even mentioned that in the trading, I said there was 8 more points left till we get to the level. Did I not? I think I maybe I said it. Okay, there it goes.
You did say it.
Yeah, okay.
Okay, here. 8 more points. Okay, here. Just to give you an idea on how that mindset was working. Here. I was betting, I don't know at what time, 12:55. Let's see. Okay, maybe I need to go. All right, go away, Shorty. Okay, where is it? Let me go on 5 minutes. What do we say? What was it? 12:55. Okay. So this was it right here. I think we were doing on this trade here. What did I grab? Oh, it's extensions on. I knew something was wrong immediately. Okay, so 12:55. Okay, so 12:55, he said that it had a couple more points to go. I was expecting as soon as we come into this, remember, this is about zones, not about levels, single levels. This is mine, right? Could I have grabbed more? Yeah, but I don't have a lot of, on top, so I didn't grab this. But this was close enough for me. I said we were coming. We had 8 more points to the target. We were watching for 36.75 at that time. Where was it? Well, maybe somewhere here. I don't know where it was. 36.
I
Oh,
remember.
SPX. No, that was SPX 3675. I'm sorry. So I was looking at SPX and I said 3675. So if you guys know, there's a little bit of difference on levels still. 1245. Let's see, 3675. So we were looking for rejection here somewhere. Okay, cool. That's good enough. We were looking for a rejection here. It came in a little bit under that. So if if we drew the volume profile from this guy here, because this is all we had, right, at that time. We didn't know the rest. So if you look at this, we're going after this 3675 shelf, and they came very close to it, but they didn't hit it. And I said we're going to start getting in, but the price of the contract came in the range. I think some of you guys got, 3, 4 fills. Some, I think, got even, I don't know, I think somebody got maybe a different trade, below 3 fill. And I was expecting a rejection here, and the contract price was coming to a point of or below where previous buyers showed up on that particular contract. So if I know the price is coming to a rejection point, and the contract that's shorting is losing value to the point where the demand is for it, now I got that signal, okay, as soon as you come in this range, I'll buy it. I might have a little bit of a drawdown if in case, these 3 points that we did not hit goes up, but I knew, right above it, that's my stop loss. If it doesn't work out, it goes, and this trade worked out perfectly. I think that these contracts went to 14 at that time. Of course, we didn't sell it there, but my highest was 7.8. So again, it was a good trade, just well organized and planned and trusted what we see. And it's a simple setup, as we talked about this. The setups that you have, guys, there's just a few, and they're covered pretty good here. It was a volume accumulation setup, but I was looking in a downtrend. I was looking where it's shorted. And then same thing you could have done here, right? So you guys see this run up that we had? If you grab this, right, and you look at this right now, you're going to be like, okay, well, man, this doesn't make sense. Well, let's take a look, right? So watch this now. We came over it, we danced about it, they tried to trap people short, and they did successfully. And look at this. You don't have to go immediately on the retest. If there's, you have this volume shelf, right? You can play the value area high. Once it breaks value area high, we just, somebody gave us same exact scenario, why we should not take this range, right? Why is it that you should not kind of get in right here? Anyone? You're playing for 5 points, guys.
Yeah.
Like, it doesn't make sense to be in a risk for 5 points, right? It's much easier to, if this gets a breakout, you probably get a nice little momentum. We talked about this level. We knew 37.16 was going to be painful today. And it became very painful in SPX. So if you want to buy, this is a bullish volume accumulation setup. The one I showed you earlier was bearish because we just finished a really nice downtrend. So for me, I was just excited to find where we're going to be looking to short it. And that was kind of like right there. Okay. So that was the idea behind, the volume accumulation setup that ties back to the whole aspect of psychology that we were talking about. I don't have the profit gap because I know the setups that I'm looking for, and I just look at the chart and I can expect to see. Is there a setup for me right here, right now? I don't see it run right here. Maybe you guys see one, but I don't see a setup right now. Is there, potential breakout over this? Maybe there is, yep, who knows? Well, now if I look at the bigger picture, right, what we just talked about, so you would take this breakout right here? Who wants to take this breakout here? Anyone? Come on. No, nobody wants to take this breakout here. It's 65 minutes, guys. It's an ascending triangle in 65 minutes. Nobody?
Maybe above the value area high.
Yeah, exactly. This is not a setup that we trade, guys. This is not my setup. I don't even see this. I know what you guys see. Some people see it as an ascending triangle. Of course, they're wrong. But this is not a setup in my head. For me, the setups are identified here already. So far we identified 2. What's the third one?
Retest.
No, not you. No. That's
Sorry.
not you. Sorry. No. You know this.
That's an honor when he tells you can't answer, Angel.
I know, sorry, buddy.
Okay, Sith. Give me another one. Sith. Nobody else. Sith. This is all you know.
Something different than what I see what we talked about?
No. Did you read the PowerPoint?
No, not all the way.
Okay. Then this is your problem number 1. You don't even know what to look for in terms of volume profile and setups. It's hard to trade different people's opinions and not be mad. Because so you have to be real with yourself. Anytime you listen to somebody, if I give you advice, hey man, put this tire this way, and you put the tire that way, and the tire falls, right, while you're driving on the highway, are you going to be mad at me or yourself?
I'd be mad at myself for listening to somebody else.
Okay, fair enough. But why don't you change the tire yourself then?
Well, you're right. I mean, I got to learn it my own, you know.
So your problem, you get emotional, and I see you, right? I pay attention to everything in chat. Like I process it, I store it, and you remind me of Josh 4 months back. Until you put honest work in, you will not get honest results out. And if you have not read the PowerPoint, I suggest read the PowerPoint. It will take you 40 minutes to go through it, write down the questions, set up a one-on-one with me. Let's go through it. But I want to see you put in effort first. And then we'll eliminate your emotions. Once you eliminate your emotions of being excited or mad, there's nothing to be mad about. I'm not mad if I lose it because I was willing to lose that money anyways.
I get mad at myself.
No, I don't get mad. I don't show emotion.
You can't get mad. You have to accept that money is lost the second you enter a trade.
I got you.
And it's not about right or wrong. It's never right or wrong. We talk about the odds in your favor. If the odds are in your favor, that's great. But the odds are only in your favor if your stop loss is respected. Because if you put $1,000 into a trade, the 1,000 goes to a 0, and there's no odds. The odds of you getting that 1,000 once 90% of the contract is lost is very, very, very low. And just because if the trade goes against you doesn't mean that you were wrong, like in your analysis. Your analysis were spot on, but the market decided to go the other way. If you could control which way market's going to go, I'm pretty sure you'd be 100% trader, right? Oh, I want it to go down now. Oh, okay, well, here we go. Let me just turn the knob down and fucking goes down. You make 1,000%. Is there people that have that information that can do some of that stuff? Of course, but who cares? We are not one of those people. There's a low probability that any of us are going to be those people. So why not just play the game the way they set it up and profit from it? Play with them and play the rules, learn how they play, and then play along. As soon as you accept the market that it will give you, but you have to respect it. If you don't respect the market, it will take everything away from you. I've seen people lose homes. I've seen people lose families. I've seen a lot of shit in trading. But that's when the mental side is not on the right side.
Okay.
So hopefully, the psychology side of this, and this is a lot of it is directly from Trading in the Zone, guys. He covers a lot of these topics And I promise you, the first 4 chapters, you might as well just talk about yourself in that book. He's going to define you in every sentence that he wrote. He's talking about you. And until you read, if you read the book only once and you made progress, you go read it back now and see, hey, did I progress here or not? And be honest with yourself. Create a little check mark. Am I better at this? And be honest. No? Well, then read the book and see how is the best way to deal with it. And the best way to deal with it is to have a plan, have the setups that we look for. And once you repeat these setups, guys, I can live off POC rejections for the rest of my life from just drop me somewhere with internet and PC. I'll just trade the POC rejections and up and down all day, every day. I just simplified your trading. That's all you have to do. Look at the previous day POC. When the price comes back to it, just go long. If it fails, just cut it right below it. And do that every day. Okay. What's another one here? Let's see.
Shorty,
Mm-hmm.
I have a question. So with the previous day POC, you're talking about 60 minutes, is that correct?
30
Time frame? Oh, 30 minutes, okay.
Mm-hmm.
So I was kind of a little bit confused about the 65 minutes and then the 30 minutes.
I chart in 65 minutes. Do you know why I chart in 65 minutes?
I think from the way I'm looking at it, looks like it gives you more data, is that correct?
Yeah, but why? Yes, of course. More time frame, more data, but why?
You will get even 6 candles. The trading hours divided by 65.
Yeah, I get a perfect division, guys, of candles. If I do 1 hour, right, so here's my day, if I go on SPY, one, two, three, four, five. How many candles in a day here? The days between these lines. How many candles do you guys see?
Got 6.
6.
6.
How many candles do you see now?
7.
7.
The reason why I picked 65 is because I get an even number of candles. The last candle is not full hour. Right? So that's why. I use 65 minutes when I look at the data and structures because it's even distribution of candles all across. That's why. But 30 minutes, you look for POCs. For instance, here, let's see, VSVP here. So you mark your levels on this level. And if you're comfortable doing something else, this is not a golden rule, guys. If you prefer to, if you want to use 15 minutes, okay, man, just use 15 minutes. The difference is, the difference is not like, oh my God, you're going to make a breakthrough because you switched. You want to use 5 minutes? Yeah, go use 5 minutes. I really don't care what you use. Here's 5 minutes and 30 minutes right now.
Excuse me, Shorty.
Yep.
So the 65, you look for what now? Sorry.
I'll look to find structures like on 65 minutes.
Where most of the buying and selling, the accumulation and stuff is, right?
This right here. This is my SSL high here, and this is my SSL low right here. This is what I'm looking for in 65. I'm looking for channels.
Gotcha.
Yep. So now I have this previous day data here for SPY, and even if I don't look at anything else here, for me, could I have gone multiple ways here to trade it? We broke the previous day POC, and it's right here. Okay, if I went long here, which was 367.88, and this came back all the way to 368.83, do you guys not think I can make 100% on this right here?
For sure.
Guys, this is easy 100%. Might not look like it, but this is 100% right here. Somebody, if you don't believe me, go take a contract when this hit. Take the contract at at 10:48. I would probably play 368 calls here, and see how much they went up. If somebody wants to do it, Daniel, if you're up, if you got it, so you can post a chart. I don't have tots up at this time.
You're talking about right there where you're.
Yeah, I just said I'll try to retest the POC and live off of it if you want to simplify it. Once you break the previous day POC, let it go above, and you come back and you buy it. And here's your, I will bet my life there's minimum 50% on 368 contracts here. Anyone got it? Nobody? All right, I can check from my phone. I don't know, where is it?
Oh, what time was that at?
The trade would have been taken at 10:48. Let me see, SPY. It might be gone, but no, it's still here. Okay. At 12:45, that contract was trading at, what was this? Call it 34 cents, right? That's what I'm seeing on SPY. And that contract went all the way to 66 cents. Almost 100% here, guys. Off by a little bit, maybe 3-4% from here. And even if you don't get the 100, you have the level. You buy it on the POC, you know to get out here. If you have multiple trim here, if you see strength, sell it there, and that's it. They already gave you an indication where the supply is based on the previous wicks and selling. So you knew that there's a little shelf here, and they're going to protect that gap above. And look, I mean, that's almost perfect hit here. So that's another way to trade it, right? I mean, fairly easy. Is you can trade these POCs pretty much all day.
Sorry, I got a question on SPY. If you get a chance, looking at the 1 day, would that be like an ascending wedge, a falling wedge? Sorry.
Hold on 1 second.
And then I also looked at it on the 45-minute, and I found like maybe the next level could possibly be 352. But just wanted to double check.
Does this make sense to everyone?
Should it be opening price or does it matter if we ever get above the previous day POC?
Whatever that is. If we open above and you come back to the previous day POC, it's bullish, right? That means we're able to push the price. It's better if they do it during the day because it shows, who's in the control in terms of what type of buyers. If they, pump it overnight, they usually pump it over key resistance levels.
Would you scale it at the current session value area high or the previous days?
So you would look at if you have enough data at that point, you would look to see how it rejected, how it behaved. If it taps previous day value area high and it rejected, and let's say, current session value area low or high is 2 points below the previous day high, and usually they're going to be close when you're consolidating, really, really close. If they're really next to each other, you take the closest one to it, right? The closest one to the POC, because you don't want to hold for the additional risk.
Shorty, can you please open up the chart and explain it just one more time, man, please?
Like the POC or which one?
Yes.
Okay. So let's see. So this is your, previous day POCs here. Let me remove this. So your previous day POCs here, and I got to go on smaller time frames. Let's see. So it's right here. So once you're able to break this POC here, you came back for the retest. This is at 9:30. You came back for the retest and you ran. Then you come back here at 11:30. Something's off here, but okay. I thought it was 12:45 earlier. This one maybe because I was in a different time frame.
Sorry, Shorty, really quick. I know what it is, but I don't know what the abbreviation is. The SSL, high and low. I know it's the current structure, but I don't know what the
Dumpster, you want to take that one?
He made that up, Shorty's.
What is it?
Well, I'm waiting for Dumpster. He's the owner of it.
I think he's sleeping.
He passed out. That's why everything's so good right now.
Dumpster. So we were gonna make it structure low and structure, high, but stop loss, right? SL stop loss. So Dumpster said, "Hey, let's use it as structure low and a structure high." So that's what we got.
But you have structure. Oh, never mind. I thought both said low. I'm tripping. My dyslexia is kicking in hard right now. I thought they both said low. Okay, cool. Structure low. Got it.
Oh no! I just wonder if you had the same gummies here for a moment.
No, I have the coffee you took in Colombia. No, I'm joking.
So this is the POC off of, let's call it 15 minutes for the purposes of showing here. So now if you look at this, where's the damn POC? That's right there. 12:45. There's this one. Yeah, I think I don't know which one how did we get 12:45 earlier? I have no idea.
So it came back, retested, went back up, came back down, retested.
But we talked about this. I think it was 10:45 to 11. But anyways. Oh, it was SPY. Okay, it was SPY. Oh, you're right. It was SPY. Yeah, it was definitely SPY. Yeah, it was here. Yep, good job. So it was SPY. So what we did, if you open up or if you go above previous day POC, which we did here, we broke it right here, right? So this is where you broke it. You broke the POC. You kind of danced on it, right? So if you look here, you danced on this POC here, and then you came back, and you came back to the retest. All you have to do is, be ready to find a contract that's very close. I usually look, if I'm playing quick, especially on days like this, on SPY, I buy the next one up. If I'm at 367, it doesn't matter if it's 367.90, I buy 368. And you just move on up, and then, think about it. If you look at this timing of this, the contract, you could have made some decent money on that run. I think somebody said 40%, and that would have been 40%, and you're talking about less than maybe 15 minutes. And now just think about it, like APR wise, that's a hell of a return, guys.
That little retest to where it's wicking there, that was 40% on a 368 con this morning.
Yeah,
between those two lines right there.
My SPY contract,
Wow.
2 to 6.
That's insane.
Yeah.
Yeah, this right here was, I think it was more. So I'm looking at the chart right now, and we're saying that this happened at 10:45.
Yeah, Josh killed that one.
Son of a bitch, I missed.
Yeah, I took that from 2 to 6. I fell asleep and forgot to sell it.
Okay, so that one.
That's one way to do it.
Right.
Yeah, he's right. So it was 40%. Yep.
I ended up selling 2. My Wi-Fi was like lagging so bad. I bought 3, so I sold the 2 and carried 1 over.
I mean, from 1.7 to 2.2, that's good money, guys. On this tiny little crap that went up. And sometimes you'll get a better bounce, sometimes you won't. But 40% on your money is good. It's 20% on your money. Just think about it. Let's say your account, let's say at 50K, 10% of your account per trade, you put in 5K here. On this trade, you put in 5K. What did you make?
Something crazy. Like
You made
2K?
2,000. You made $2,000 on this little bounce.
What are those 2 levels you have marked there?
Oh, they're just the value area high of the previous day and the PO.
So do you give a lot of consideration to the current session? I think my mistake is that I keep playing off of the current session instead of paying more attention to the previous session.
It's very important.
It's important, but the levels move. I don't care. I care about the current session levels more towards later of the day, like between 240, 230, 4. I care about them because that means those volumes and shelves. So think about the law of averages, right? Of the numbers, right? The more numbers you have, the more data you have, the harder it is to move the average, right? Think about your grades back in school. You get 10 Ds. What are your odds of having an A with 1 final test left?
None.
0. So when we get later in the day, like we did when I was looking for a rejection, like around 245, it was giving me a really good level here. Once we sold it here, we had a sell-off, and I was looking for the rejection. So here, and look what time we're approaching. At 3:05, you're approaching this level. Yeah, well, and it's the first time you're visiting it. And look at SPY. Phew, crap. High volume node maybe created it, here when it was kind of dancing, and it dumped. And we know that this high volume node here is bearish because that's where they reaccumulated. So it was good entry as well for shorts or value area high. And that's why having the levels set and playing the levels is key. So this was our entry. If you shorted SPY here, that was a great short. Multiple failed auctions here, guys. Usually failed auctions, they're going to tell you we're going to go there, but you're going to come back and revisit this to break the confusion on the auction. And look what they did. Multiple wicks here. Failed, dump it, and then they came back, resolved the auction, and then they went off. And here we are now. What are we doing here now? Think about when we talk about balance and imbalance, right? Let's revisit this slide here. What are we doing now? Think about this picture right here.
Looks like balance.
Okay, so let's think about the process of the market, right? This was our balance area before, was it not? Right here, below the red line. That's what we said, right?
Yes.
That was our balance. What did we do now here?
Look for new value.
We first created an imbalance, and we popped out of the previous balance.
This is the acceptance phase?
Now you're in the acceptance so far. Here, you came back, they accepted it. They said, hey, man, this is a good deal. They started buying it. They came back, they made a higher low. We noticed that because you're in the range. You made a higher low, still being accepted. How do we know it's rejected?
Once it goes back below.
And where do we short it?
On the retest.
Okay, thank you. You just did the watch list. You're shorting here, not here. I don't care about this. This can also do this. We need to confirm that they're going to do this. If I do this, they drop it, right? Let's say they come here and then reverse. I don't have anywhere, for any sort of trust in the market. I don't have a setup. It's not my setup. Once we do this and you drive it back up, I'll get in here. We'll pay attention how aggressive they go, right? But as they drop here, this is our entry. This is potentially the entry for shorting.
It could also go up to the value area high, retest and go long.
You could, yeah. So 37 to, if you're after 9 points, that's good, but I'm not me. So between the 9 points, you have a POC that's 4 points on each side. I'm not going to fight over 4 points.
one thing, Shorty, that made it click a lot for me was in that Trader Dale book where he talked about supports turning to resistance or resistance turning into support. So like on that retest, right? Like the buyers that started buying it up going towards the retest, they know there's aggressive sellers up there. So the smart buyers know like, oh, the aggressive sellers are going to come back in. So it's like when you connect those dots, it just starts making a lot of sense, you know?
Yeah, and that's all. I mean, when you think about it, the flips of the resistance, and that's what they're doing all the time. And that's, and, you know, if you think about it, that's also in your setups, right? It's one of the setups in the PowerPoint, and I identified it for you guys. Is the break of the resistance, and I talked about it here, right? Support resistance directly from the Dale book, where you get in. They broke it here, and that's what Manch is talking about. There was aggressive sellers here called who? What is the name of these sellers? Are they responsible? What are they?
Initiative.
These are the initiative sellers. Remember, guys, it doesn't mean there's more selling. It just means the nature of the selling. Is it aggressive or passive? Aggressive means they're using what type of orders?
Market.
Market.
They're under panic. They were like, man, get me out right now. But the passive ones are like, oh, okay, well, if you come here, I'll sell it. And those turn into the market orders, and they might be in the ask or a bid side, depends how it's structured. But at that moment, they're not participating to drive the price down. They're reacting to the price reaching to their level. That's the difference. So here, there was initiative sellers, right? And then these initiative sellers, what did they become here?
Passive sellers.
They're what?
Responsive.
Sellers?
So you guys are all three saying different things. One at a time. Go. Rumi, go.
Responsive sellers.
Yeah, responsible sellers, right? But they came here, and now they're responsible to hold the level where they were initiative before, where they put in a lot of market orders. Now they're just going to defend this with limit orders. And the same thing happens if you go down. What happened here? We dropped, we hit you exit your short, then you have aggressive initiative buyers. They popped here and they said, hey guys, we're going to take this over. They pop it, they bring it back here, and these buyers now have to defend their long, and that's where you enter long. That resonate to anyone?
Yep.
And this is called high-low setups, the break of high-low, support becoming resistance. I mean, they're all here. These are your setups. They're all identified here. You have examples. You just have to put time to go through it and understand it and look for it. Everything that you need to know about volume profiles, I would say 85% of it is in that PowerPoint. Okay? So now you guys understand the balance and balance. We talked about it. Where's my text though? Maybe it's gone.
I wrote that picture down in the book in one of my notebooks.
Yep.
It's probably farther to your left.
Yeah, I'm thinking it's all the way there. Somewhere there it is. Just hide this. So now you get an idea how we can play this, right? So you have these setups, right? And you play them, right? So if we're gonna go, just not looking at these levels, just to visualize it, you can do a couple of, easy visualizations here, and I'm just gonna treat it like, let me just draw that POC so I know where it's at. So that's the POC here. This is our value area high. I usually mark that purple, so I know it's value area high of some sort. This one is green. Why is my value area low green?
That's where you will want to go on the retest.
That's what I want to buy. That's the best reward risk to reward ratio, is buying on the bottom of the retest here. Okay, so now if you think about it, you can visualize the type of place, right? So we dipped below here. Here's one. I'm giving you a visual. You come back here, you take long to POC is 1. Okay? And this is accumulation of, I guess, few days here. So just, you got to trust these levels, and they're a little bit bigger than, previous. So I'm just going off of this. I'm not considering previous day POC, none of it. So then you have a level here. Some said, when it comes back here, take it. I don't know. To me, this is just not a good.
Not enough meat.
Not enough meat for me to do it. You can definitely do it, but you just have to know that you're playing like 9 points, which is not bad. It's a valid setup. It's just in this scenario, there's just not enough meat. So this would be your first profit target. This would be your second. Okay. So let's say now the price moves up here. Okay, they break here. You could definitely come back here and drive this here. This is 16 points, twice as much this range. This is not bad. You break above the value area high. You don't reach the top. You come very close to it. You drop here. This is not a bad buy. Buy on the bounce. That's good, right? So now, do you short it here?
No, you can, but I'd wait for it to see if it breaks, retest, and go long.
So there's usually most people losing money here, because that's where the traps happen. This is a really high trap zone for market makers. This is where they make their money, right? Because retail, remember, they fail to acknowledge that it's about probabilities, and they want to be right and they want to be correct, and then they have an ego and they lose all of it. So here, multiple ways to play it. You can play this right here. You can definitely short it if you know how the process started. Here we started from higher low. We're making them. You can see how aggressive these sellers were here. So you could only look at this piece here of this rejection here and see where they were, right? So they were really at this point right here last time that we came. So a lot of sellers were there. So there's things that you can do to kind of help you gauge it, right? Another thing that, we're going to add to your weapons is they're kind of reading the tape and see, is there an imbalance on the upside or downside? Is the supply higher than the demand? So that way you can tell as you're approaching key level what's really happening. So that's another way to look at it. If you take a trade here, find the closest, if there's any wicks or volume shelf, it's not rocket science, right? So if you look at this and I can grab the recent sell-off from here to here, can I not do this and see if there's any sell-off here? I could even take this one from here. Well, once you break this level here, there's a high chance you're going to be running a little bit more.
Yep.
Let's get the bag.
So for me, where's the stop loss? You can keep the stop loss as tight as possible. If you want it to be right above this little wick here, sure. I don't know if you want to enter this here, because that's 12 points away. I'd probably keep it as close as possible here. So let's say 37, 4 1/4. Put the quarter at the end just so you don't get stopped out over it. And then this is your trade. You enter the stop loss high, boom. And let's say this trade goes this way, right? And it goes poop. That's fine. Totally okay. You lost the trade. It's okay. You cut your losses. Now you bring it back. You go here, and now you do this. Where's the next play that we want to do?
Long.
The retest and then
short. Yep, short. Yep.
The short happens here all the way to the POC. Or, I'm sorry, value area high first, and then the POC. I got confused with this. Okay, so value area high first, and then you go from here. You have another level, and then you take it here. Usually, if this does not show much strength, you're making lower highs, lower lows. That's telling you we're in a nice bearish trend now. We're reversing, right? So if you're consolidating to this level, which I don't know how you would do, you will have to go on this level here. The aggressiveness of the slope of it, was it fairly aggressive down, or was it kind of dragging along this way like forever? And then if you're doing this and it takes 5 hours to get to this POC here, what does that tell you about the aggressiveness of sellers?
they're not
Where's this one? This one's aggressive. Yeah, this one is much aggressive. So that means you can trust the sellers to do the right things that you're expecting in your setups. You're expecting them to show up here because you don't want them to break that previous lower, well, in this case, maybe lower low. I don't know where the previous one's. This one, so you're shorting here. So that high low and the flip of the zones is right here, is it not?
Yep.
This was a previous support. You broke it. Now it's gonna, that support becomes resistance, and that resistance is also our structure high. So now this gives you a little bit more confirmation, and it's the same setup that we talked about from the setup here, break of the resistance. Where was it? I think slide 18.
B shape.
This. So here, same setup like this. It's just reversed, right? You break below, you come back, and you short here, and you break below, you short here. That's the flip of the resistance. What I would typically do is something like this. I would look to see if I can grab that volume from here to here to see where the sellers in that case, just to make sure that I know if I'm entering here, where is the next closest shelf for my stop loss, right? And then, at the POC, you want to be, anytime you're around POC and you're looking for a bounce, you want to be given some kind of certainty that it's going to happen, right? So here, as you're coming, you're going to be getting out. You're going to be taking profits. In other words, you're going to be helping. If somebody plans on going long, you're helping them. Because right now you're reducing the delta, right? Because you're negative here. Now you're short. You're buying that back. You're closing the contract. Therefore, you're helping the delta become delta neutral. So here, people are going to be looking to go long, like we talked about earlier. You want to be careful here if you're not selling, because this can really reverse. And this is where, I personally, if I never get a retest on the POC here, let's say that this one went, maybe something like this. I never got the retest on the POC, first retest on the POC. This is where I go long. I'm looking to see, how aggressive was the trend. And then if I see we never got the retest here previously, well, this is not a bad level to try a long level and go high. And you saw earlier in SPY that yielded almost 40%. So this would be the setup that you're looking for. Then if we go below the, the POC here that we are accumulating, and this is real life scenarios for tomorrow, just FYI. If you drop here below, you don't need to be in a rush. We're probably going to go all the way to here, to this shelf, then come back. It's going to go somewhere like this, and then eventually it's going to make it to here. But nobody mentioned anything here about 80% rule. Does 80% rule apply on this combo?
Yeah, it'll apply, but you have to be careful with the POC right above. You're probably better off taking it at the POC or the retest of the POC.
Yeah, but the 80% rule itself does not apply on when you multiply this. Then you need to multiply the same range previously, same number of days, and see how it corresponds to the 80% rule. Look at it at day over day, week over week. If you're a swing trader, look at it on week over week. If you're a day trader, like we are, majority of us, you look at day over day. If you're a little bit more swing trader, look at the month over month and see. Use PVP, right? Go on 4 hours, look at the PVP here. Let's make sure it's on monthly. So let's see. Here's monthly PVP, and now this is our current month. Here's our previous month value area low, so you can play that. Once you get inside the value area low, and here you really never got kind of time to get back inside and give you that drop here. So here you got inside. So you got inside this area, but you got really, really quickly rejected. And this never got retested either, right? So eventually, there's a chance they might drive this to this level. Here you have the previous month POC, which is what, July, I believe, 38.56. Yeah. Okay, so this is your July POC. You see here, we broke below it, right? We broke below this POC. There was some aggressive selling here. They broke below it, and we never went up to retest it. So now, when I look at the story that I'm looking, okay, well, there's a lot of imbalances, right? So if I look at this guy from here, let me just find the first one, candle here. Let's say to this level. Well, what is this story telling me?
The buyers is right there where the resistance is.
Buyers?
That's where
I
the
mean,
seller.
sellers. Where the red line is.
So the sellers are sitting somewhere around here, and then even the previous, July POC is confirming that, and this level hasn't been retested. It was acted as a support once before. Now we dipped below it. If we are able to break this 37.40, there's a high chance we're going to go to this level here, between 38.80 and 38.57. So there's no volume here, guys. In this case, in the most recent month, there's no volume here.
What about that little? What about that little step that right above it? You don't think we might get a little resistance there, right before the red? Yes.
Yeah, there's a high chance. This is a high volume node. Yeah, this is definitely a chance for a rejection here. If you're able to get over this, come back, go here. If you see weakness here, then yeah, it makes sense, right? Then if you go a little bit more further back into June, what's here?
It's right there. Yeah. PLC.
So now you have a plan, right? You break above this SSL high, you can take it from 37.32, 37.70. You break this zone here, you come back on the high volume node, 37.80 to 38.57. That's a good level. And then even the sell-off is here, right? I mean, so there's a lot going on in this area. You have, what is this? May, I think value area low is going to be there somewhere. So this becomes a really congested area for rejection, right? Now look at this. It acted as support, right? Here, acted, broke it, came back, acted as resistance, came back. Here, it bounced off of this cluster now that we created. Well, we broke it, but we never came back. So maybe there's something that's telling us, hey, this relief bounce might do something. And in terms of structure, that's double bottom. Okay. So does this help anyone? I mean, if you're struggling, did this session help you at all?
Yes.
Yes.
Yeah.
Definitely. It helps a lot, like by seeing the details you are just providing here, rather than just simply having a PowerPoint. But at least you spent a lot of time. Thanks for taking time and walking through the examples. So it's definitely helpful.
Good. Because that's what you have to visualize it, guys. It's more art than it is science, right? You might see something else, and I love it, right? In the group that we have people that follow the flow, we have the people that follow VMAs, we have the people that trade contracts, we have people that design their own strategy, and that's the beauty of it. Look at UK Wildcat. He incorporated volume profile into his strategy, and the guy is consistently green. Should I tell him to change something? That would be the most fucked up thing I could do. There was no reason for him to change it. It's working. He's making money. He's green. He's consistently green. Mr. Bean, same way. Is there things we can improve on? Yeah. But doesn't mean you change what you're doing. If you deviate from it and you get greedy, Bean, I'm not picking on you, but you wanted to change a few things about yourself and they came back and haunt you last week. You oversized once and, it took a hit. And then you wanted to maybe a revenge trade or whatever that was. And, it kind of gave you a, hey, welcome to the market. I'll humble you.
That's the worst thing you can do. Revenge trade.
Yeah. So in terms of psychology, I mean, if you have not read Trading in the Zone, I really suggest that you take some time. It takes about 2 hours to read it. Read it. Look at the market. Think about what we were talking about here. Read my PowerPoint. Read the book. Like, do some trades. See if you can apply yourself as it teaches you in it. And then a month after that, go read the book again and do a checklist. Am I better here than I was before? Do you find yourself as often in that book now than you did before? Did you change anything?
Yeah, I read like first couple of chapters, but most of the time I could resemble myself like in that question, like whatever the process he says, like a greediness, fear, or reckless, I could just equate to me where I just think back and lost all the money. So it's really helping to see where or what needs to be changed.
Yep. And he covers that as well about the F's. If you read the book, he talks about that a little bit. Does anyone know what I'm talking about?
No, Shorty.
Okay.
Say it again, Shorty.
But he talks about the 5 fundamental truths, right, about the market, and then he talks about the 4 F's.
4 F's. F
Yeah,
like
letter F as in Frank.
Oh.
Maybe you guys don't recall it, but just know for me, the biggest advice I can give you psychologically is that you do not know where the market's going, and if you don't know where something is going, you want to manage the risk, right? If you see that you're in a train on a bridge and you see that there's a piece of bridge missing over there, do you stay on that train or are you going to take a chance to get off?
Yeah, get off.
Yeah, the same thing as the stock market. Just reverse it in the stock market. If you see potential skinny belly, the stock can accelerate here and you're short right in that area. Why do you want to go with that train? It's okay to be wrong. And you really don't need to know what's going to happen next to make money. You just have to trust your setups and what you're seeing. Just like we talked about, POC, just like the rejection today when I hopped on live a few times. And you're always going to have wins and losses. Your distribution is going to be fairly close between them, in my opinion. Maybe, 65-35, you're going to achieve that, maybe 70-30. But as long as your risk to reward is good, you're okay. And just know everything literally in this market's unique. I
know for me.
Yeah, I mean, and
sorry, sure.
everything repeats. It repeats, but there's something different about it.
Shorty, can you answer a question about value area low and high for me?
Yep.
I get how it's calculated, the deviations, the 68%. I know most of the volume obviously is traded between those two areas. But the previous day value area low and high, if we're out of it and we're coming back into it, what makes that so powerful of a rejection point? Because sometimes it's like it's yeah.
Yeah. So think about psychology of it, right? So right now, what's happening here? We'll use this session right now to prep for tomorrow. Here, value area high is just the extreme highest value of the value area. It's nothing more to it. It's the basically top of the 68% and the bottom of the 68%. That's all it is. So probabilities wise, right? Statistically, the 68% is inside. Once you come up outside of 68%, there had to be an imbalance. There had to be a reason to create the imbalance. And this is just how the markets work. They will create an imbalance based on news, new pieces of information. Markets say they always account for all the information that's out there about the stocks and the markets, right? But if there's a new piece of information that drives this imbalance, right, it's called an inefficiency, right? So basically, you're creating an inefficiency. You're going away from the value area where 68% of the volume people are trading happily in. When you go above it, and when you come back, the people that believe the news, are imbalance and inefficiency and the price should go higher, they're going to come back to that level and try to defend it to prove the point that their value is good. And it's also, they did the market orders here to drive it up. So when they bring it back in, they want to make sure that it's defended and that we go and search into higher values. We want to be accepted in this value next. That's what they're telling you. Once you break this area, they're saying we should really be trading in this value. So the people that were selling here, that were initiative sellers, that were aggressive selling, what can you expect from them here? If these initiative sellers are stronger than these buyers, the price is going to do what?
Reject.
It's going to reject, because then the supply is going to be greater than demand. And that's what happens. If these buyers are serious about the value, or if they know something that we don't, they might be aggressive. But if they're not more aggressive than these guys, price is going to reverse and come back. And this there, value area high might move up depending on how we are looking at it, whether it's previous day or accumulation. It might move up a little bit because maybe they'll buy a little bit higher. There may be new buyers coming in. That's why it's important, because statistically it's important. And then the buyers, the initiation of aggressive buying or selling, that's why they're important. Because usually to break these levels, you need initiation. You need aggressive buying or selling. So those levels tend to be retested to make sure that you're not a fluke.
All right. Thank you.
Mm-hmm. Okay. So does this, from psychology, you really need to work on psychology and the mindset part more so than technical. Technical, I can teach you. The mind, you have to start teaching yourself, no emotions. It's about probabilities. It's about your setups and respecting your setups and your losses. Once you're able to identify those things, I promise alone, you will become 50% trader. So if you're on the edge, you become profitable. And some of you guys, I know you had the aha moment in trading because I see it. And some of you guys are very, emotional, and I don't think you're being true to yourself or how much you're putting in terms of work. And I'm not bragging, but tonight I'm going to do more studying for myself. I'm going to look at the markets. I'm going to go look at some historical data in certain cases, what happened, just so I know what are the probabilities of going up, going down. Look at the PCC ratios, when the inflation really started taking off and the rates were talked about. Look at those moments and then compare to PCC, see how the bounce came back. So for instance, something like, I think, let's see here. All of these are almost the same. So there's things, the cycles that repeat, right? But they're all different. So here, if you look at it, right, we go on, let's go on 3 days here. So think about this, guys. The first dump that we had from here to here, right, what was it, 12%? My mind, the way I work, so, okay, well, how big was the bounce? The bounce was 8%, right? Then you can take this whole thing, right, and treat it as a down leg. And you can see a little bit more about the averages, right, and durations, right? So this was 14%. Then we got to bounce a little bit from here to here. So last time we dropped 14, we went up 12, right? You can also do this one here, where you dropped from here, or call it here to here. You dropped 17, and you got 10. What is happening? Is anyone noticing anything?
Smaller
Bounces
bounces.
smaller.
One at a time. What is happening? Think about spreads. I'm giving you a hint.
The bounces are smaller.
Yeah, and the bounces are getting smaller. The spread inside is getting, you went down 17, you bounced 10. Then here, obviously, you made a higher high. But now you can take a look at this one, the final one, right? I mean, we bounced 18% here, right? That's pretty big. But then you're dropping 15%. What does this tell you?
reversing.
It could be, right? We did not make a new low. On every one of these drops so far, we made a new low. So now, we're not done. Maybe we make a new low here. We need to break 36.39, and we know what's the difference between these drops. How much we have to drop in between is what's left, right? So now we know that this level is going to be pretty crucial here, that we have 36.39, because if we break it, then we'd be able to measure. Let's say if this is the bounce, let's say, the last fall here was, what did we say, 17%, we are 15.
18.
Well, let's say we go 20, let's say 19.5%. Well, it's 19.5% here, and you're dropping here a little bit. Well, maybe the retracement will be between here, and average was 10. I would think it's going to be smaller than previous, and somewhere around 8. If this market is going to continue, we still have to stay in this trend, guys. Lower high, higher high, lower high, lower high, lower high. You have low, lower low, lower low, lower low, lower low. Now, a lot of people are assuming we have lower low. Which one of you knows if it's going to break?
Nobody.
Yeah, guys, I don't have the crystal ball. Who knows if it's going to break? All I did is I expected a bounce here. I expected some people to come in here and defend the level, and we're kind of stuck. We have a double bottom structurally. Unless this is broken, we don't know. So that's why it's important to wait. And if we break this level, how many people do you guys think would be sucked in for a short tomorrow, where we break right here and do this? Not saying tomorrow that we run. It's enough to run to here, and most of them would be screwed because they don't have stop losses and risk management. They short here, and then it does.
Yep.
A lot of them, right? Is there anything that you guys notice here that's interesting to you guys? Anyone?
Volume.
What about volume?
Look how high it's getting at the end there. It's going up.
Oh, yeah?
I mean,
Selling.
the selling is going.
We also have a double bottom there.
When you see a double bottom, what do you guys expect to see on the second bottom of the volume? Would you guys expect more selling or less selling?
Less selling.
We would expect less selling compared to this area right here, right? So if you think about this area, first time you hit it, right, let me just go here. You would expect to see less selling than here.
Yeah.
Right? So here we started with nice selling, beautiful candle here. It lines up kind of relatively to the previous candle, so no anomaly on this one. Then you see, smaller candle here, smaller body, agreement. And then here you have a little bit of bigger volume, smaller body candle, so something is wrong. And we popped up a little bit, right? So we bounced from here, and then you see, they started picking up. So here, the biggest body candle here has the second biggest volume of this whole sell-off. And then here, I would say, I don't know, maybe this one and this one's very close. So I don't think there's a bullish anomaly yet, but there's something in the works right now that's building kind of. Overall, the sellers are getting exhausted for now.
Seems like the candles don't match the candles on the top. The volume on the bottom doesn't match the
They're
candle.
very close to being right. They're super close to be right, but from this sell-off here, there's a little bit of slowdown. So now just think, how can we use volume profile? Well, here we go. Did anyone think about this?
Wait, did you just pull that from the higher? I mean that bottom to this bottom?
Yeah, I grabbed the double bottoms. I want to know where the volume is.
Never knew you could do that.
How'd you do that? How'd you do that, Shorty?
I grabbed the volume from the first tap of the candle right here, of this candle to
Yeah.
the current candle, and now I know where the volume is distributed on this range that we are seeing.
Very cool.
No, it's very important and very cool too. So where do you guys want to go along here?
Right above that value area low. Wait for a retest and then
Yeah.
aim for POC or aim for the
Be
POC
careful. No, be careful.
or the.
I'm grabbing data from June 16th. We're in September.
Okay.
When you grab so much data, there's going to be stronger points coming up. So if you're going long on this, you're not going to get this in a day sometimes, right? In this case, you can get this in a day. See what I'm saying? Like if you break this, there's a high chance you can go to the 3742 here.
Okay.
See what I'm saying? So, but now if I go on higher time frames, I mean, you have to buy some time because last time, it took from September 13 to get down, September 26th. So this is a swing setup, not a day trade setup.
Right. I had no intention of that happening in one day.
No. So the POC, yes, that's our ultimate target, 3966. But if you're taking a retest of the value area low here, well, then you have different, targets that you want to be looking to trim your positions, right? So, you have this level, which is going to be a pain in the butt for the market. I'll probably say here somewhere. 3721 is going to be pretty painful. Then you have 3742. Once you're able to break that, then you have a shelf kind of lingering here. So you would have 3770. Does anyone recall this level from earlier?
Yep.
I'll just show you real quick because you guys have to start building some memories here.
All three levels are actually memorable because even a 3716 from today was a pain in the butt, which 3721 is not too far from it.
Yep, exactly. I'll look at this 3772 right here that we identified. I believe it was June POC, right? Isn't that what we said? We said it was June POC.
74. Yep.
Yep, June POC. Was 72 is the POC, and what is this telling us right here? Well, what the hell is this? Come on. Do you see this shelf right here? So, it's not a single level. You can mark this shelf right here. Does that not cover the same levels as the other one? Right?
30, yeah, and your 3742 is also a level. I just can't remember what it was, but it was something you had said it's a good area to short.
This one here? Well, here it was, I think it was the break of the area, let me see, of the gap. Let's see, 3742, let me hide this guy.
Got 3748 at the July value area high.
Yeah, we had a level here. I think this was this high here, the rejection, 3740. And then there's a gap here. If you guys remember, it was the start of the skinny belly. Right? This is the start of the skinny belly, and we said if you're to go short at SSL high, there's a high chance that you should probably put it right here, keep 7 points risk, and then expect downside. Otherwise, you're caught in a. This was our potential play for the stop loss on this level here. If you guys recall. So now, yeah, I mean, all we have to do is hold this area here, get inside, hold this, and we're looking, let's say, for 15-minute candles. We're holding inside.
Pardon me, Shorty.
Yep.
The fixed range you got there is what, 65 minutes?
It doesn't matter what minutes. Remember, I grabbed the dailies.
I got
I
you.
grab the bottom to the top. It doesn't matter what time frame you're on. If you can find the same and fit it on a chart, sure.
Okay, thanks.
So
Are you
now,
grabbing exact values, or does yours kind of rubber band to the high and the low that you're looking at, or do you just kind of grab them from an approximate value?
no, I grabbed it. So I was looking at the double bottom, right? So I started here on this candle to this candle to the last. So the first candle, that's where my double bottom starts, to here.
Okay.
I'm interested to see where's the volume here in between this area. And there's no right or wrong way of looking at it. It's just what I'm after here. I'm looking at it on 3D, on 3-day, not 3D, on 3-day candles, and I'm interested to see, this spike. I could be interested in just seeing this spike, right? If I want to see this run up, okay, I can just see this run up here. I probably have to go on 65 minutes here, maybe 4. Okay, well, if I'm interested in this run up here, this is where a lot of buyers were initially, right? So this was their value area low, and it's the level that we've seen before. It's still that tight level that we needed to get over. And then the POC is right here where the buyers were. So we really can turn bullish above 38.28, because that would mean the buyers regained their control level that they had once before, but this one was really never retested. So this is buyers. And now I can even break this down into the seller side.
Shorty, can you show your settings really quick? The inputs. So everybody, make sure you have extend right unchecked at the bottom there on inputs, like Shorty has. Thank you.
Why? What difference does that make?
And now, we're able to see that on the sell-off, the value area low is in this area, right? And something to notice is that we bounced off this value area low really nicely before. And of course, we never came back for a retest, but we retested the POC. So now, this zone becomes your no trade zone, and this becomes kind of, you get in above it, we go long, you get in, you show weakness as you approach it, we reject it, right? And then, of course, I'm not giving you every scenario, I'm just giving you how I look at it. So here's that 37.68 that we talked about. And we know that level has some, resemblance to everything that we did tonight in terms of the levels, right? So it's going to be that 37.72 level that we talked about earlier from June POC also here. That's right here in the range, right? So here's 37.950. So now I'm able to build a picture kind of for myself. There's a shelf here. If this goes here, I can expect some rejection here. If we go over, I mean, it's not bad. You can play this. That's, 23 points in here. Yeah, you can definitely play that. Retest, play it, go long, but be careful, right? Because, the buyers are going to be a little bit exhausted looking for profit taking, and these guys are here like, hey, this is our high volume node, high chance for rejection. And then if we get over that, you go up to here, again, you look for rejection. If by any chance they're able to push this off and they want to, really, really do some damage, this is where they're headed, 39.79. Once they come here, this is probably the easiest short you're going to have. So it'll be kind of the range that we were looking for. Sorry, you guys get it. This would be the range we're looking to short, probably all the way up to 4,000 or somewhere like close to here. Yeah, 4,007. But I was simply able to kind of divide and conquer to see what is really happening, right? Looking at this area, I looked at it individually on the up, see where the buyers are. I looked at it here. You could also look at this, on the whole sell-off here from now, let's say from here to here, and see what is your story. Well, pretty good story. We dipped below, you came back, you failed. We just talked about the same exact setup on ES, did we not? You come back under the POC, you wait for the retest. And then your first profit target would have worked great. You take it there, and then of course you would just look for new shelves where you want to take profit, and you could have been using this right here, and you would have known this value area low is your second profit here, And then, you had a shelf here, that would have been your final one. And then you had a node here, that would have been also your zone for profit. So hopefully the stories come and start making sense to you, because it just becomes like a storytelling. At least it is for me. So this is a major level where, there's going to be some fireworks at this level. And I was actually in Colombia when I told you guys this level is going to reject. And now this whole sell-off here, we're looking at 39.67. That'd be great because it lines up with this whole value area low here. I mean, this would be a gorgeous rejection here. I think we don't make it past this one. Pissing me off out here. Look at these value area lows lined up here. Really, really big levels here, 38.50. Okay. So any questions that I can help you answer to kind of give you a better sense of understanding? Okay, guys. So my recommendation for a lot of you is really invest time into it. You attending, a session and not doing anything with it is not going to change who you are, right? You attending a session tonight and kind of being honest with yourself, how much work you're putting in. I'm giving you tools. I'm giving you, I'm putting time for you guys as well as for myself. PowerPoints, sessions, live. But if you guys are not willing to devote time and take, whether it's your sleep or whether it's your fun days or drinking and stuff, you have to lose something to gain something. You just have to pick what you're willing to do in exchange. And a lot of you guys are selfish. You don't want to lose anything and you want to do something. In trading, you can buy time. Today, I think in a couple of hours, in a couple of minutes, maybe 10, 15, we had 3 times we had 100%. Or multiples. I don't know. I think it was multiple times that we were able to hit it. I think it was 3 minimum that we hit 100%.
That's crazy. And so much.
I'm sorry, say it again.
I said it's kind of crazy now. Like thinking about it, I'm in the car thinking about all these plays that we do in this Discord. It's crazy how many bangers really there are that go from 6 to 20, 6 to 15. There's been so many bangers that we've had. It's just crazy. I was just thinking about it. I know it's beside the point. I didn't mean to interrupt, but I was just thinking it's crazy how many plays we've had set up with these levels.
And they just repeat. That's the beauty of it.
Right, yeah, exactly. So if you miss an opportunity, there's always that next opportunity. That was my biggest issue, was chasing in the beginning, and then it ruined me. And then now it's I can wait, and it's crazy. You can watch it play out perfectly.
Yep, and that's the
It's
beauty.
really eye-opening.
You got to trust your levels, and you got to trust your volume. You got to trust the things that matter. If your chart has a lot of bottom indicators, about a lot of lines, EMAs or simple moving averages or whatever, I suggest that you take all of it off. Even if you do, just trade 30 minutes. If you're fairly new, just trade the breakouts of channels and retests. Make your life simple. Here, just do this. Don't even worry about volume profile till you learn it. Trade this. Once this breaks, just don't take it in momentum trades. Come back for retest. Trade there. Once this breaks here, come back here and take it long to the next level. If you do this, you're going to be profitable. As long as you know your stop loss is inside, You know, if you want to become more sophisticated, use volume profile for your stop losses. You can make it as simple as you want, and this repeats on every time frame. You don't believe me? Well, here's your 5 minutes here. Same thing. We break here. There's your little 5 minutes, and look, we broke. We consolidated again inside right here, and we never came back to this level. So if we dump here, what should you do here? Anyone?
Go long.
Yeah, you want to go long here. It's a good trade. It's a really good setup. Okay. All right, guys. Well, hopefully you guys have, you know, for some of you, maybe an opening session, because some of you guys are very close to becoming profitable and consistent traders. For some of you, you're still emotional. I don't think you're putting a lot of work in. I suggest start with the volume profile. I'll upload the latest one, the PowerPoint. Then really read the trading in the zone. I mean, you got to understand the psychology side of the things, because until you do, it's not going to be easy for you to recognize who you are as a trader and, you know, finding the purpose for yourself as a trader. So I really think you should spend some time figuring out who you are as a trader, and then kind of put some rules around it so you know how to trade it. This is a good sport here. Okay. All right, guys. Well, thank you. I'll catch you guys tomorrow. I'll post the levels right now after I'm done, and then we'll go from there.
Thanks a lot, Shorty.
Thank you, Shorty. Will you be live tomorrow?
Most likely, yep. We'll see how the day is.
Have a great night.
Boring, probably
Thank you
not.
so much.
Thanks, Shorty.
Thank you.
Hey,
Appreciate it, man.